Hi, my name is Patrick Bratelius, and next up to present is the co-founder of Clar, Christian Jakobsson. Please take it away.
Thank you. Yes, my name is Christian Jakobsson, and I'm the co-founder of Clar. We built credit rails globally, so we're empowering end customers, giving them more transparency and increasing conversion rates for the lending industry. We are a digital loan broker, so our secret sauce is divided in two. We have a panel of different lenders, banks and no banking lenders, and we have so that's one secret sauce, that the different lenders have different credit policies, risk appetite, and different segments in the market that they want to attract. So that's one part of the secret sauce, and the other part is to simplify the process for the end customer. So the process is 100% digital, end-to-end within our platform. So that's our business model. So do you show the presentation here or?
The video.
Okay, perfect. So in the slide in front of you, you can see the process. The end customer comes to our service, apply for the product. We connect them with all the lenders in the market, which respond with an offer, and they can accept and sign the agreement straight away on the platform. We have now 221 lenders connected into our platform, and 34 million users customers connected to our platform. The blueprint of our business model is based on the success of Lendo in Sweden and Scandinavia. The team worked with Lendo and Smarta in Sweden, and they had together 26% of the Swedish market 2015. So all the new loans, 26% of these were provided by the digital loan platforms Lendo and Smarta. 2020, 5 years later, that was 40% of all new loans distributed by the loan brokers. Today, that number seems to be 60 plus. More than 60% of the market comes through these digital loan brokers. So that's the platform that we work with and that we roll out globally now. Throughout history, we've launched in different regions. So the global lending industry is not global, it's divided into regions. So a lender like Nordea, they focus on the Scandinavian market. They don't go abroad because the balance sheet is different. It's a huge balance sheet that needed to be a global player. So we're a broker with no balance sheet, and we can attract more or less all customers with different lenders with different customer segments. So we rolled out this model in South Europe with the brands Prestol and Creditis in Spain and France, in Central Europe with the brands Luando and Acredo, and in Brazil with the brand Financeiro. And also Lendala in ASEAN region, in Singapore and Hong Kong, and Taslefa in Bahrain and Saudi. So that's the regions that we pinpointed so far and that we're growing from. From these specific markets, we're about to roll out into new markets. So from this experience and the relationships with the lenders that we have in each market, we go on a global rollout mission now. From Spain and France, we roll out in Portugal, Italy. From Singapore and Hong Kong, we rolled out in Australia and New Zealand. And from Poland and Czechia, we're rolling out in Slovakia. And we are also going from Mexico up into US and Canada. So that's how we roll out this model. And we always look into the market when we're rolling out that it's a large population. It's a digital maturity in the market. It's a high expected GDP growth and low competition. We have a 5-step integration model with our lenders, going from Clar 0.0 to Clar 4.0. So 0.0 is basically a lead generation model where we send applications to lenders, and then we start integrating and getting a deeper relationship with the lenders. So over time, we simplify the process for the end customers, and we simplify and reduce the friction for the lenders, which enable us to charge a higher commission. And our business model is a commission business model, approximately 6% or more on the total loan that the customer gets. and it's upfront commission, so we earn it within 30 days from the loan has been signed. So going down in this relationship with the lenders, we can go up to 15, even up to 20% on commission. And in these graphs to the right in this slide, you can see how the deeper integrations, 2.0, 3.0, is taking bigger chunk of the number of lenders, the number of contracts, and also pushing up the commission in general in our platform. So there's a couple of things here. But one is the different lenders segment. When a lender themselves do marketing, they only focus on 15 to 20% of the market, because that's how they price their product, and that's also how they finance their business. So when they do marketing, they get 100 average people, and they can only give a loan or convert 15% of that market. With our business model, we have up to 70 lenders in one market, so we have 70 opportunities for that lender, which makes us having a better conversion rate than our competitors. And we also have a commission with upfront revenue, which makes us cash flow. Our cash flow is very quick, so we can grow quickly. We don't need to wait for the customer to be loyal until we have the profit of that margin. We also keep all the data about the customer, and we know all the different lenders' perspective on that customer, so we can easily help refinance that customer and help them get a better loan when the maturation time is over of that loan. As you see in this graphic, this is the evolution of our customer base. We're growing quickly now, adding approximately 2 million new customers, connected customers, to the platform. And as you see on the grades, we have 4.9 or 5 on a 5 graded rate. So very happy, satisfied customers. Here's some data about some of the markets. So for example, in Lendela, the graph up to the left, you can see the average revenue per contract is increasing steadily. Because we're adding more partners, we're renegotiating commission level, and we're adding a better and better product mix. So our product mix is unsecured loans, car loans, mortgage loans, but also SME loans. So more or less all loans that in the market you can get through our platform. And a similar model, Financeiro in Brazil, you can see the CAC, the cost per acquisition, is continuously decreasing because we're getting a better brand awareness, more free of charge traffic. Even the banks are using our financial model as their second solution. If they can convert their customer, they use Financeiro's platform to convert it to someone else, and we do a rev split model with that. So that's a very scalable model. And for example, in Spain, Préstalo, you can see the lifetime value times divided by CAC is continuously increasing. So in general, we have 60% of all the costs are in marketing, so it's a very scalable model with low administration costs, low cost in general, no balance sheet risk, and 60% of it is within marketing. Something we can continuously optimizing and can change depending on the market situation. So yeah, maybe a little quick, but concluding remarks, we are a global player, so we have an extremely big total addressable markets where we have a strong position. We have a scalable platform that we built for 7 years, and with this 34 million and counting customers. We have a proven strategy. We have done this in multiple countries and quickly reached good numbers. And from these markets, we can roll out in a more global environment. The team, we're now 214 people, 10 of them with strong Scandinavian experience from this model or the banking industry, and a very attractive financial model that proven in Sweden have a 40+ EBITDA margin. So yeah.
Thank you, Christian, for that presentation. Yeah, so I have some questions for you in the Q&A. So considering the economic cycle and where we are and demand for credit, what is your view on growth prospects going forward in your different geographies and regions?
Yeah, I think our business model is in two global megatrends. So one is that The outstanding loan book is continuously growing in our markets, and also the digitalization. So the customers in the market are normally offline, but thanks to COVID, more and more banks and lenders became online and start making their decision online. So we're in these two global trends that are pushing organic growth for us, because as soon as the customer and the lenders are online, we have the best business model for that to win that market. So that's two mega trends that are very important. We have built when we built Lendo in 2009 in that recession, marketing got cheap. So 60% of our cost is marketing at the moment. So what you can do in a market that has more cheap marketing, you can still attract more or less the same customers, because everyone needs finance and need to make sure that they have the best deal. And we have cheaper markets, so we get a better return on investment in marketing and scale quicker. And since we don't have a balance sheet risk, we don't need to secure that we have specific risk, because we don't have a risk when we go into next month. So every month is a new month, and we can adjust our marketing budget.
Thank you. Interesting. Another thing that I thought about is that in the Nordics, the online broker channel like Lendo is extremely popular. How does it look in the other geographies and regions where you are?
Yeah, exactly. In general, there's most of the competitors, they do a click-out process or a lead gen process. And the reason for that is that they don't integrate with banks and lenders. They send the traffic to the lender, similar to the comparison model in Sweden. And one reason for that is that the infrastructure is not digital enough. Sweden has always been, more or less always been, very early in making the infrastructure digital. So we have had Bank ID for a long time. Swish pushed that to more or less all the Swedes, which simplified signing of documents and also identification. We always had UC or other credit bureaus that have a good credit score, and we always had Kronofogden that secures that it's a safety net for the end customers, but also the lenders that lend out money. So that infrastructure is very important, and that's in these markets is more immature. So now when digitalization is happening more later than in Sweden, we see that trend coming, and we can take the position and scale from there.
So how many creditors or banks do you need to make a platform successful?
Yeah, exactly. To become the best in the market, we need approximately 20 with different segments, a different perspective on the end customers. So that's 20 different lenders, maybe 6 bigger banks, 6 mid players, and the rest on high risk end. If we have that, then we have a good conversion funnel for the end customer, and we can optimize that continuously. But then we have now, in some markets, 75 lenders, so we have more or less the whole market, and that's because everyone wants to work with us. But it's some of them that takes a bigger part of the volume, because they're more integrated, we work closer with them, so we reduce the friction, and they can give a better price for the end customer, and that increases volume for them in our funnel.
I see. When you research and look into the Nordic players, it seems like they have EBITDA margins of 30 to 35%. Is that applicable also to your company, or is it different in your regions, and why, if so?
So it's a matter of digitalization maturity. So Sweden is very mature now, and it has been for maybe 8 years digitally. So that's something that needs to happen in this market to have the full profit market. We have higher commission rates than we have in the Nordics, and we have shorter loan time, so we have a potential of renegotiating and helping the customer more often than we do in the Nordics. So the potential is there. Both the markets are bigger, so we have a bigger top line potential, and we definitely have the same potential of the margin.
Okay. And how is the regulators' view on this type of business model? We know it's successful or approved here in the Nordic, but how does it look in other parts of the world?
Yeah, exactly. We need a license, so we have a license to be a broker in each market. The regulators, what we bring to the market is transparency. So we have a model that we show all the lenders in the market, and that brings transparency for the end customer, so they can truly see what they, as their own individual, can get as an offer. So all the offers on our platform is for their, it's tailor-made for them. So it's not a general list offer that end up being something else. So all the offers in our platform is there only. So it's bringing the end customer power to decide, and also transparency to see all the fees. So and this is in line with the goals of regulators. So they really like our model. It's better than the customer going to one bank, have a cumbersome process, filling out the paper and get one offer, and often the cost is very hidden. So it's hard for the end customer to then know if that's a good loan or not. In our model, we show all the different parameters, and they can decide if it's the bigger volume, the bigger loan, or the cheaper loan that's most important for them. So in Singapore, for example, we are to provide their financial platform in the Singaporean market. So MinLaw, the government legal arm, has asked us to build that platform for them, because they think that that's more transparent than what's happening now in the market. So they truly like this model.
Oh, interesting. When you look into your presentation, you can see that you don't own all of the companies to 100%, that you have a smaller ownership in some of them. Is that going to change in the future, or how does that co-ownership work?
Yeah, exactly. We built Clar as an entrepreneurial company without investors to begin with. So we got co-founders and investors in our local markets. So Finwire in Brazil and Lendela in Singapore and Asia and Hong Kong was co-founded with local team and local investors, or Swedish investors investing in those markets. And that to secure that we have the best brand, the best team, to make sure that it's a success in each region. And then COVID happened, and we raised capital in Clar because we saw that digitalization was truly happening, and that also this business model is, if it works in Scandinavia, and Brazil, and Singapore, Hong Kong, then we were more or less fully secure that this is a global product truly. So we raised capital in Clar, and from there we own 100% of our business, and we are working continuously with our companies with less partnership with, so the ones we have 20% of, but we see a future where we own everything through Clar, 100%.
So do I understand it correctly then, that in some of these companies where you don't own 100%, you are possibly looking to increase your ownership stake?
Yeah, exactly.
Okay. Thank you. You usually talk about the Nordic, particularly Sweden, as a very mature market, but another, when it comes to credits, but another very mature market is the American market. But to my understanding, it's not a very popular model to use the broker channel. Do you have any understanding why that is not a popular
Yeah, exactly. We have there? The main digital competitors. So the US is divided in 50 states, and those 50 states are different legal perspective on KYC and lending. So that makes it more of so US is more like Europe. It's not one market, so it's 50 markets within one market. And that makes it harder to be a truly digital loan broker, because you need to make sure that you have the license and the KYCs in all the different regions. So they ending up being different players in different part of US. So that's pushing our digital competitors to do a more shallow integration with lenders and have a shallow relationship with end customers. So they are click out or lead gen model. So they compare, they have general list of offerings, but no offerings are tailor-made for the end customers, and then they send away the customers. For example, we have Credit Karma that does that, which ended up being an exit of $8 billion. So still a strong model, a very popular model with high rates on Google also, and a lot of users. but it didn't integrate as we do deeply with the lenders, with one-end integrations, because of the legal structure and the KYC. Open banking is not a law in the US yet. In Europe, the PSD2 definition or law made sure that all the banks need to share their data. And that data is used now as a credit score, a transparent credit score for everyone to use, and something that's current. So it's more accurate than the last year tax income statement from the government, because it's the latest 12-month transaction from the end customer. So when open banking came to Europe, the banks started using open banking as their credit score model, and that improved online sales and increased online sales. So when Plaid, for example, they work in US to make open banking available, even though open banking is not a law. It seems like open banking will come to US after some time. That's the global trend. Europe was first, but other markets are getting there. So when open banking is fully launched in US, I think you can see US as one market instead of 50 markets within one market, and that's a great potential for the digital loan broker model.
And finally, as a last question, can you say anything about how the revenue development was last year, and what do you think about the future going forward? Do you have any prognosis for what you can achieve for 2022 or even further out?
Yeah. Yes, we've had a strong growth in all our markets, pending from 20 to 40% improvement from quarter on quarter continuously during the year. So it's super strong growth, ending up being more than 100% growth year on year. This year we do 24 million euro in the platform as revenue, and the coming 2025 we forecast without additional funding to do 218 million euro. So that's
okay.
That's the plan.
Now that's a strong growth.
Yeah, but it's thanks to these global trends that we discussed, and also the business model being so that, and having super happy end customers coming back, being loyal in the platform, increasing the revenue over time.
Perfect. Then it seems like we are running out of time. I'd like to thank Christian for the presentation and the interesting answers. And thank you so much.
Thank you.